Instagram. Instagram. Pause due to poor connection. All right, so here we go. Testing. Hello.
I just wanted to see the
Video. Okay, bloody jolly good. Not that one, definitely not that one.
I had not seen a single bit of
Okay, so there we go. That works. That works for me. All right. Reconnecting. All right, nobody there.
he doesn't know what he works at half the time.
Pause due to poor connection. That's just not good. There we go. Here we go. We go loop-de-loo. Oh. And we're ready. Oh crap, that baby's dead. Alright, so that one's charging, that one's going, that one's going. Okay, go live, there we go, reconnecting. Home. Alright, I have no idea what's going on there. Alright, so you guys getting ready to roll, getting ready to stream. A little bit less noise. There we go. Bloody hell. Come on. Alright. Who do we got here? Hey, Blueberry's here. Look at all these people coming to say hi. 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 Hello. Oh, Jessica's here. Jessica. Simba's here. How you guys doing? Close app. Wait. Sorry, I'm trying to get Facebook up and running. Jessica, how you doing? Dennis, how you doing, Dennis? And Big E, Mark's here. Mark Dunn. Alrighty, Mr. Mark. I'm having problems with Instagram. Okay, what the heck is going on here? There we go. Alright, so maybe we have it this time. Do we? We do. Alright. User 7166. Mark, how's it going? 910. Alright. Everything's setting up. 1% charging. Blah, 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 blah. Okay. Maybe that might be working. Okay. Is it? I don't know. It's working. Yes, there it is. That's just some weird ass shit. Almost ready. Alrighty. Go live. There we go. Live in 3, 2, 1. Hello from Miami. Good evening, Empty Pockets. Sway, if you could give your younger self any advice, what would it be? Larry, Johnson and Johnson, my younger self, invest more often for compounded growth. All right, so we're getting ready to live stream, manage broadcast. No, it's not made for children, and it's for entertainment purposes only. Here we go, and it should be live any moment. Okay, that one's up and running. Alrighty, so now I need someone, okay? Amazon long-term view. All right, Larry, I like the fact that you like Amazon. That's great. However, I don't do Amazon because Amazon does not pay dividends. So Amazon is a no. Sorry. What one advice would you give my younger self? Gave you actually stuck with? Early to bed, early to rise, makes a man healthy, wealthy, and wise. That's the advice. I was looking at IVR today. Yay or nay? IVR. IVR. AT&T, huh, Steve? We'll take a look at them. What am I doing? Watch later, watch later, watch later. What is all this crap? Facebook is not cooperating. But then, do they ever? I have a question. Do you invest your money or do you day trade? No, all my money's invested at all times. I buy on Monday, sell options, and then my money's always tied up until Saturday. Having issues with Facebook. Maybe they don't want to see me. I don't know. Resume. There we go. All right, so it's up and running. Here we go. Early bit, early to rise, something, someone wise. Okay, dividend stock talk. There you go. Nowhere Fulcher. Do you know if MoonPay is legitimate? I have no idea what MoonPay is. Simone, how are you? And Kathy's over here on Instagram. How you doing there, Miss Kathy? All right, so we're getting ready to get started because we got all the cameras up and running. YouTube's working, TikTok is working, Facebook is working, Instagram is working, and I need someone to go to YouTube. Let me know if this screen here behind me is working properly and the sound is okay. All right, what's the risk of early exercise on EX dividend date week? I'm not 100% sure I'm following you in that question. What do you think about JEPI? No. I don't have a lot of money, but I keep buying 2 a month. Interesting. Brooklyn, hold tight. I'm gonna jump in and take a look at JEPI for you and tell you why I don't like JEPI, and then we'll get to that in a minute. Ransom, why are there so many accounts with the same name as this one? Well, Ransom, one second. Not at the moment. Mike, it's not working? This is not working, Mike. All right, so Ransom, to answer your question, I started this like a year and a half ago, did a bunch of videos, and apparently people like what I have to say. So there's 23 or 24 people pretending to be me. Okay, now it is good. Okay, so Ransom, there's a lot of people pretending to be me. So you hear me live right now, so you hear what my voice is. Okay, when I tell people, if you're really interested and you want to talk with me, DM me with your phone number, I will call you and I will talk to you. Now, I've gotten emails and texts from a lot of people saying they were scammed by other people using my name in my videos, whatnot. EX date July 1st, don't know if it has weekly options. RITM, never heard of it. Parkis, how are you? Oh, Picaris, sorry about that. RIMT. What the heck is RIMT? RIMT. Yeah, sorry, that's a no. RIMT is a nothingness. RITM. RITM. Yeah, that's a no also. Now, the reason why I'm saying no, Richard, okay, the reason I'm saying no is because it has monthly options. Now, if you don't know the difference between a monthly option and a weekly option, well, here's the skinny. I don't even know what that means. Here's the skinny. Basically, a monthly option, you can trade an option. Now, an option is more or less the right, not the obligation to buy something. Allows you to get a little bit more money coming in. Design alligator, sure, no rush. Excellent. Kind of like that. So, monthly means I can do it once a month. Now, a lot of us invest our money for a yearly return, a percentage rate, APR, is that right? APR, annual percentage rate. Okay, yeah, I dropped that years ago. Seriously, I invest for weekly returns. Okay, so not many people go by what a weekly return is, but if I was going to do a monthly, means I can do it one time per year. Now, at this moment in time, this stock is at 10.95, so I'll be looking at the $11 strike price. Now, the $11 strike price on this particular stock, okay, say 11.08, the 11 is going for 5 cents per share. Okay, now 5 cents per share on $11 stock, it's not that bad, but here's the thing. I've got to hold it for 4 weeks. Okay, then I have to figure out where do I think the stock is going up, she goes down, she goes up, she goes down, she goes up, she goes down. Next is she should come down just a little bit more before she heads back up. But how am I supposed to figure out what's going to be in 4 weeks? And if I'm getting, let's do the math real quick. Okay, so clear that. So we're getting 0.05 cents per share, and we're paying $11.08 per share. Gives us a grand total of less than 0.5%. You see that? 0.4. That's less than 0.5%. Well, you know what makes it worse than that? I've got to divide it by 4 to get my weekly returns. That's 0.1%. That's not even close to 1%. See, whenever I do numbers on monthlies, the numbers just don't work. It's not worth my time and my effort. And I can only do it 12 times a year. All right, so I like weekly options. Let me show you quickly a weekly option so you get kind of an idea. We'll use AT&T because everybody knows who AT&T is. It's at it's 1865. So the 1850 is going for 26. I'll lose 15 cents off of that. So 15 from 21, from 26 is 11. Okay, so I'm getting 11 cents off of an $18 stock. Okay, great. So clear this. 11 cents off of an $18.50 stock, and that comes to a grand total of 0.5%. Now, I don't like 0.5%, but here's the thing. Now, the stock that you showed me was paying 0.4 for the month, which is 0.1 for the week. Okay, but this is giving 0.59, which is almost 0.6, and that's for a week. So if I multiply this by 52, gives me a grand total of almost 12% per year. Wait a minute, that's not right. Clear. 0.0059 multiplied by 52 gives me a grand total of 30% per year. Now, the stock you were showing me paid monthly, and it paid less than 0.5% for the month. This one here, AT&T. Now, here's another thing. I know who AT&T is. That other stock that you rattled off, I have no idea what let's pull it up again. RITM. Okay, Rhythm Capital Corp. REIT. Yeah, never heard of AT&T. I have heard of. Okay, Rhythm, never heard of them. So I would be more apt to stick with companies that I know, understand, and okay with holding. Now, when I came up with this trading strategy, now remember, for those of you that are new here, this is a trading strategy I created for my 9-year-old daughter when she was 9. This was back in 2008. So I had 5 criteria, 5. Okay, it had to be simple, it had to be safe, predictable, consistent, and there had to be no way that she can lose any money. So for those 5 criteria, I came up with 5 rules. 5 rules. Never buy something you do not understand, or you do not know, or you do not want to hold long term. I never heard of Rhythm. Never heard of it. AT&T, I have heard of. No problem with AT&T. I got a problem with this one. Okay? Never buy something you don't want to hold long term. Never sell at a loss. Make sure it has 20 years of increased dividends. I have no idea if this thing even pays dividends or not. Make sure it has weekly options, because I want a weekly check 52 times a year. If I can get 0.5% 52 times a year, that's over 30% a year. If I can get 1% per week, that's over 50% per year. So do the math. Okay, number one, I've never seen a monthly that actually paid well. And then with a monthly, I've got to figure out where it's going to be in 4 weeks. I have a hard enough time trying to figure out where this thing is going to be in 4 or 5 days. That's challenging enough. You want me to figure out 4 or 5 weeks? Yeah, that ain't gonna happen. All right, so again, never buy something you do not understand. I don't understand it. I don't know it. Make sure, never sell at a loss. I'm not gonna sell anything at a loss. Number 3, make sure it has 20 years of increased dividends. I have no clue about this company whatsoever. Number 4, weekly options. Well, it doesn't have weekly options. Number 5, make sure the numbers work. Well, the numbers don't work. All right. Number 5, make sure the numbers work. Now, these numbers. What can I buy the stock for? What can I sell a covered call for? Because I like covered calls. They're one of the safest and easiest trading strategies there are. You buy a stock, you sell somebody the rights to buy it from you for the exact same price you paid for it. So $11, I sell the 11, I get 5 cents. That doesn't thrill me at all, especially 5 cents for the whole month. And if I don't hit my target, I got to hold that damn thing for another 4 or 5 weeks. Yeah, it just doesn't work for me. All right, so that's RITM. Never heard of it. All right, so now somebody wanted to take a look at I'm going to go through the questions first, then we'll take a look at JEPI. If you trade, whoops. Wow, there's all these questions. All right. Ooh, this is a good question. User 5423. If you trade daily, don't you have to pay 30% tax on any profits? Well, someone has been listening to the wrong people. Now, if you're paying 30% tax, you definitely need to coordinate with a tax strategist or a tax planner. Okay? If you go to the IRS, they have that big ass book, 22,000 pages, whatever it is. That book is specifically designed so you do not have to pay taxes. They come up with all these rules so you don't have to pay taxes. So you need to set up your trading account in a manner in which, if you make profits, you do not have to pay taxes. It is your legal right to do everything in your power to legally reduce your tax burden to the IRS. Now, that's as far as I go with the tax conversation, because I've never heard back from the 2 tax strategists that I sent out emails to. One of them we emailing back and forth, and then she just dropped the ball and she's just not replying anymore. The other 2 dudes, they're just not replying at all. Apparently, I don't have enough clout to be worthy of their time. It is. I'm just getting started, so I'm only in this, this is month number 6 for me. So I'm assuming as I get a little bit further, I only get 14,000 people that actually listen to what I say. So once I get a little bit higher, maybe they'll start paying attention to the people here. So yeah, if you're really worried about taxes, you really need to talk to a tax strategist. Okay? PHK, Lee, I never heard of PHK. PHK. Disney, we already got Disney on the list. We'll take a look at it. Don't know if we'll get to it tonight though. How do you sell your dividends to someone? How do you do the call? Ooh, that's an easy one, Jax. All right, and Jax, I'm not selling the dividends. Okay, what I'm doing is I'm buying a dividend stock. Let me just stop here for a second and go over something really quick, so it might be able to understand a little bit easier. All right. June, okay, here we are, we're in June. All right, so this, my friends, is the month of June. Okay, we all understand this is a calendar month of June. These little green dots. Now, for those who can't see these little green dots, okay, this screen here behind me is live on YouTube. So if you go to YouTube, that10minutetrader.com, eventually I'll have all those links recreated again in my new website, because I've had the same website for the past 15 or 18 years, and it just got it redone last week, so we haven't gone through all the links and whatnot to make sure everything's working. But This screen is live on YouTube. You go to YouTube and you look up the10minutetrader.com. You'll see my pretty little face. And then you'll see this on another screen. So I have two live. As a matter of fact, let's take a quick gander at it. Let's take a quick gander at it so you can get a quick glimpse of what's going on. I wait for it to load my channel. Here we go. Videos. Oh, sorry, go to live. Go to live, here we go. See? Screen one, live. And this one right here is live also. So one is me standing in front of the screen, what you're seeing now, and the other one is just a screen with me up in the top corner. Okay, so that's that. You don't need to see that anymore. We'll get to this. We'll get to that in a little bit. Okay, so let's go back to where we were, which is right here. Okay, so first thing you want to do, okay? Can I use a cash account to do option trading? Yes, you can, Mark. Okay, so Jax, I haven't answered your question yet. Okay, so the idea of a covered call. Number one, the simplest, easiest thing to understand about a covered call, go to YouTube, look under covered calls, and a whole bunch of videos explaining it. Let's see if I can explain it. A covered call is when you buy a stock, any stock, okay? General Motors, Ford, Halliburton, Best Buy, John Deere, Ford, Bank of America, any one of those big companies. Then, once you own the stock, you can sell an option. Now, they have two kinds of options, a call option and a put option. I have nothing to do with put options whatsoever. Don't ask, I don't do them. I don't like what comes along with them because you have obligations and whatnot, and it just makes me a little uncomfortable. So a call option is selling somebody the right, not the obligation. A put will obligate someone, and that doesn't make me feel good. But a right without the obligation, that's much better. That's a call option. So if I'm looking at Halliburton, for instance, each one of these dots represents a company. Each one of these dots on the calendar represents an EX dividend date. Let me briefly explain to you what that is. There's 4 dates you need to remember. Date number 1, let's pull one up. Right there, Halliburton. Okay, you got the stock symbol, Halliburton, the dividend amount, the announcement date, date number 1, the announcement date. Date number 2, the EX dividend date. That's the last day the stock trades before the dividend is paid out. So if you want to collect the dividend for Halliburton, it has its dividend payment, the EX date on the 5th, you'd have to buy it 4th, the 3rd, the 27th, the 30th, 29th, last month, the month before. You have to buy it before the EX date. Okay? Date number 3, the date of record. Whoever owns the stock on the date of record gets the dividend, plain and simple. If you want to qualify for the dividend, you have to buy it before the EX date. The EX date is usually 1 day before the dividend date. Okay? The EX dividend date, 6/5/24. Oh, look at this, the date of record, 6/5/24. Okay. Okay, and then date number 4, the payment date. That's when you actually get your money. Okay? So hopefully that answered your question. So when I buy the stock, I own it, I can do whatever I want with it. Now, let's say hypothetically, let's pull up Halliburton, because that's the one we're talking about. H-A-L, Halliburton. Okay, Halliburton's going for $36 at the moment. So, if you don't understand stocks, let me just briefly explain. First thing is the stock symbol you put up in the search bar. Underneath it, you'll see the last traded price. This is the last traded price for today. What the stock closed at today. All right. 34.62. The bid is what I can sell it for. If I own the stock, I can sell it first thing tomorrow morning at 34. If I don't own it and I want to buy it, well, I'm going to pay 36. Okay? The bid, the ask, volume, that's how many shares traded today. The open, the high, the low, and this is the close. All right? So those are the numbers. Now, with this one, it's a little confusing because you have the difference between the bid and the ask is $2. Now, usually during the trading day, it's usually 2 to 3 cent difference between the two. They call that the spread. So I'm going to use this number right here, 34.62. Look at the 34.50s. It's going for 40 cents. That is over 1%. That's the very first thing I want to see. What can I buy it for? What can I sell it for? And is that more than 1%? Well, how do you figure out that out? Well, you take whatever the number is, the 34.62, you take that decimal point, move it up 2 spaces, so 34 cents is 1% of $34. Pretty easy. Okay, so I want to make sure the numbers work. So what can I buy it for? What can I sell it for? And then I want to look at the chart. But here's the thing. Okay, when you're making money in the stock market, you want to buy the stock low, you want to sell it high. Well, that's not what I want to do. I want to buy it for whatever it is at the moment, if the charts and all the numbers work out. So if everything works out, that's what I want to do. I want to buy it for this price, sell an option. Now, basically, all that option is for, it gives somebody the right, not the obligation. Okay, so if I buy it first thing tomorrow morning, I can sell somebody the rights to buy it from me. Now, the one that I'm looking at, it says 28 June 24. That expires this Friday. Okay, this one here, 5 July. That expires next Friday. Okay? So, if I sell this one here, whoever buys it from me can do whatever they want with my stock between the time they pay for it and the time that it expires. It's the right, not the obligation. So if the stock shoots on up to 40, 50 bucks, they can buy it for whatever price they paid for it. Now, if I'm selling 34.50 and the stock shoots up to 60 bucks, whoever bought it from me has the right to buy it from me at 34.50. Okay? Now, if by Friday the stock is below 34.50, they don't have to do anything, and I will still own the stock next week. And next week I'll do the exact same thing. I will sell a call option for someone to buy it from me for close to what I paid for it. That way it gives me a constant cash flow coming in on a weekly basis. That's why I like weekly options. Every week I get more and more and more and more money. Now, most people, and there's absolutely nothing wrong with it, most people buy the stock just to collect the dividend, and they collect that dividend once every 90 days. So whoever is going to buy Halliburton for the dividend, they're going to collect 17 cents once every 90 days. So that doesn't work for me. For me, I'll take the dividend. It's not my primary objective. My primary objective is a safe, predictable, consistent 1% per week. And I usually get that 1% per week by buying the stock, selling somebody the rights, not the obligation, but the rights to buy it from me, and I collect 1% of the premium. Now, just look at the premium. Okay, the premium here is 40 cents. The dividend is 17. Why would I buy the stock to collect 17 cents when I can buy the stock at this price, sell someone the right to buy it from me for almost the exact same price I paid for it, and get 40 cents per share rather than the 17 cents per share dividend? It's more than twice as much as the dividend. So why would I even bother with the dividend? Well, I use the dividend to tell me when to buy the stock. Why is that, you might ask? Well, because here's the dividend. Okay, I like to buy 2 weeks prior to this date, usually on a Monday. Okay, why? Well, because stocks have a tendency to move up in value as the dividend is approaching. Now, a lot of people say, well, why don't you use the earnings reports? Well, because earnings reports aren't as predictable as the dividend dates. Okay, so the dividend dates are the exact same, almost the exact same, year after year after year. Now, the companies that I like to buy have 20 years of increased dividends. So let's say hypothetically, let's move this out of the way so I can give you a quick idea of what I'm talking about. Let's go take a look at Warren Buffett's stock list. Okay, so here we go. You ready? This is Warren Buffett's list. It says June 2024. T-Mobile, Kraft, Bank of America, General Motors, Hewlett Packard, Occidental Petroleum, Paramount, Boyd, Coca-Cola, Mendeley's. Okay, see if you can remember that. Now, let's go back to 2023. Okay. Bank of America, General Motors, Occidental Petroleum, Kraft, Hewlett Packard, Boyd, Paramount, Coca-Cola, Mendeley's. Isn't that the exact same list? But wait, if you order now, you get twice as much for the same price. Okay, now let's go back another year. 2022. Okay, here we go. Bank of America, Hewlett Packard, Occidental Petroleum, Coca-Cola, Paramount, Boyd, Mendeley's, U.S. Bank. Okay, we can go back another year. 2021. Bank of America, Occidental Petroleum, Hewlett Packard, Coca-Cola, Mendeley's. There's a few of them missing. But normally, every year, year after year after year, the same stocks pay over and over and over again. Let's go back to 2024 where we were. Yeah, I wonder what happened to General Motors and Paramount. All right, anyway, besides the point. Okay, so let's get some more of these questions going. Good evening, everyone. Hey, fascinating football videos here. Richard Cannon. Never heard of Richard Cannon. Hey, James, SCHD, any good? Nope. That's a no. Why am I saying... Okay, you know what? We're going to do JEPI, SCHD, and I'm sure someone's going to blurt out something else like VOO. I will throw in VOO also, because that's another one of those here, I don't care about my money, you do it type scenarios. What do I mean by that? Well, JEPI, SCHD, VOO, and a whole bunch of others, they're called electronically traded funds, ETF. You're basically saying, I don't care about my money here. I'm going to give it to a computer, and a computer's going to do it for me. And we're going to take a look at that in just a few minutes, and I'll tell you why I don't like them. All right, let's continue with some questions. The rolling over is just if you want to keep the shares, right? That's correct. Okay, normally I don't like to roll over. I will roll, Coney. I knew someone would throw in another piece of crap. Sorry if you like Coney. All right, TSLY, yeah, no. So Simone, yeah, if I wanted to keep the stock or if I didn't want to take a loss, that's when, see, now, for those of you guys who don't know, I have a morning trading group. Every morning, Monday, Tuesday, Wednesday, Thursday, we get online on a Zoom call. You get to actually see all the trades that I am doing as I'm doing my podcast. The podcast I've been doing for the past, 4 years. Every single trade is live on, is recorded on a podcast. Okay, so Monday, Tuesday, Wednesday, Thursday from 9 a.m. until about 11, okay, because I answer questions. I do the podcast for the first 15, 20 minutes. After the podcast, it's open mic, and then you can just ask any question you want. We'll take a look at any stocks. We'll take a look on a position, blah, 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 all that kind of nice, neat, fun stuff. But Monday, Tuesday, Wednesday, Thursday, great. What happens on a Friday? Well, Friday we jump on at 3 o'clock. Why 3? Well, because most of my trading is done on a Monday, okay, Monday, okay? That's all my trading on a Monday. I look, and then on Friday, I calculate my position I picked up on Monday. Where is it now? How am I going to make any adjustments to make sure I don't lose anything over the weekend? Okay, so that's the live trading group. So the rolling forward is if I don't want to lose any money, sometimes I roll it forward if I sold an option for less than I paid for it. So when the stock goes down, I sometimes sell less than what I paid for it. I'll get into that a little bit later. I'm not going to be here till 11:30, so fair or not, your questions will be answered eventually as we progress. So rolling forward, yeah, sometimes I do that to help keep from losing money, and sometimes I do it to keep my stock. Okay, but as the great John F. Kennedy once said, we can't answer the questions of Friday with the knowledge we possess on Monday, Tuesday, Wednesday, or Thursday. Basically, he said we can't answer the questions of tomorrow with the knowledge we possess today. But still, I can't tell you what I'm going to do with my position on a Monday, Tuesday, Wednesday, Thursday, because Friday is decision day. That's when the options expire, Friday afternoon at 4 o'clock. So if I sell it on a Monday, it has 5 days worth of value, time value, because time is valuable, especially when you come to the stock market. Okay? Monday, 5 days of time value. That's when it's worth the most. Okay? Tuesday has 4 days of time value. Wednesday, 3. Tuesday and Thursday, 2 days. Friday, 1. Friday's almost worthless. Okay? So, let's keep on going. TSLY is a big fat no. TSLY. But I do have TSLY in a different option trading strategy. Whirlpool. Ooh, I like Whirlpool. WHRL. And then what was that one? DMPL. Never even heard of that one. DMPL. All right, let's go some more questions. Yay, TSL is definitely a catch. Mike, you like TSLY, huh? All right, TikTok Paul, you're here. You're new here, okay? Good dividends too on the stock. Yeah, I'm going to disagree with Mike and TikTok Paul. Jessica, IVR has a weekly ops. EX day July 5th, 40 cents. They're down income, just rising a year over. IVR. Jessica, what is IVR? IVR. Invesco. Oh my goodness. Okay, 925, 936 to 950. Yeah. Well, let's take a quick gander at IVR on Yahoo Finance. IVR. First and foremost, IVR. Ooh, interesting. $1.60 is the dividend, but it's 17.1%. That's like one of the best returns I've seen so far this week. Okay? Okay, so, but that's not my main concern, not my main interest. My main interest, okay, my number one main interest, number one question is how consistent are they with their increasing of their dividends? Why is that important to me? Well, let's go to the maximum amount for IVR. IVR is going to be a fat no. Let me explain to you, Jessica, why it's a no. Take a look here. October 2009, $6.10 dividend. Ooh, that's great. December 09, $10.50. That's even better. They're off to a great start. But what happens the very next year, March, $7.80. Well, they went down. Okay, June of 2010, $7.40. They went down again. They're going backwards. Jessica, they're going backwards with the dividends. They're not increasing. Okay, so 2010, $10, $9, $10, $9. And then in 2011, $8. 2012, $6.50. 2013, $5. 2014, $4.50. 2016, $4. 420, 450. Uh-oh. Look at this. 2019, they go from 450 to $5. And then in 2020, they go from $5 to 50 cents. So you explain to me in a manner which I'll understand, but it doesn't get, that's not the worst of it. Look what happens next month. 20 cents a share, then back up to 50 cents, then to 80 cents, then to 90 cents, then down to 65, then down to 40. Now it's at 40. We started off at $10 a share. Now we're down to 40 cents a share, and you want me to believe that this is a well-run company? No, I like companies with 20 years of increasing dividends. What does that mean? Well, let's pull one up real quick so you understand what I'm talking about. Because we all know this one. Okay? We all know this one. I'm not going to say a word until we actually go through it. Okay, ready? Look at this. 09. Okay? 09. 13 cents. 10, 16, 11, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently increasing year after year after year. That's Microsoft. Okay? What you told me, I have no idea who they were. But Microsoft, I know who they are. So if they're increasing every year, great. Now what happens? Okay? IVR. Let me ask you a question, Jess. What happens Because you're at the high here, $12.25. What happens when the stock drops down to 650? So look, here's the high of the year, here's the low of the year. So during this time frame, was I getting increased dividends? No, they keep decreasing their dividends. So why would I put my money with a company that's not run, in my humble opinion, effectively? Now, if Microsoft continuously increases year after year after year after year, well, then they're probably doing something right because they're giving higher and higher profits. A dividend is nothing more than the profits the company shares with the investors. And once we buy and sell stocks, we are the investors. So why would I, or why would you, because what were you thinking when you decided to put your money into the company that keeps continuously decreasing their dividend? And that makes matters worse. If I'm buying it at $9.36, the $9.50 is going for how much? There's no number even there. Okay? So, sorry, IVR is going to be a no. But, you know what we could do? We can pick on JEPI, CHD, and VOO, and TSLY now. Why? Well, because they're all ETFs. I think, isn't TSLY TSLY. Here, number one, TSLY is a monthly. That's a big fat no. Coney, CONY. That's a monthly, that's a no. VOO. Ooh, that's a weekly. Is it? Yes, it is. Cool, it's a weekly. But it's a no for two reasons. One, it's over $500 a share. Two, it's at an all-time high. So there's two reasons why it's a no. We're going to get to more reasons why it's a no in a little bit. But JEPI is next. You ready? JEPI. Monthly. No. Not done yet. Hold on a second. So, 3 of those 4 ETFs were a no because, number one, electronically traded funds. I don't believe in giving my money to anyone other than me. That's like, okay, I'm too lazy, here, you do it, and then you hand it over to a computer. Let's see exactly what the computer's actually giving people. First thing we want to do, put in JEPI. Okay, go to the summary. Okay, ETF, electronically traded fund, means a computer is trading your money. What is the computer giving you? 7.3% per year. 7.3% per year. Now, I'm showing you how to safely, predictably, and consistently get 1% per week. 1% per week is 50% per year or more. So, I'm not a college professor. I didn't even go to college. Okay? Okay, I'm not an accountant. I'm not an investment advisor. I'm basically a nobody. But I do know math, and math is pretty simple. 7.3% is less than 50%. Granted, it's a little bit more effort, but here's the thing. Most people spend more time planning their weekend barbecue than they do with their personal finances. Now, when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. If you can't afford 10 minutes a day to take a look at your personal finances, well, then you deserve to get 7.3% per year. Think about it. It's 10 minutes. How long do you take in the shower? Or how long do you take going to the bathroom? I take my phone in the bathroom with me. I'm sitting on the throne anyway, so I might as well read. I might as well do something constructive. I do a lot of my trading in the bathroom. Anyway, okay, so that's JEPI. All right? JEPI is 1. SCHD is even worse. 3.4%. Again, JEPI was twice as much as SCHD. We're not done yet. Let's take a look at VOO. VOO. Oh, even worse. 1.32%. That's even worse. Okay, somebody wanted TSLY. TSLY, I think, is higher. TSLY. Wow, that can't be right. 92% yield? But it says 92% yield, but look at the year-to-date total returns, negative 13%. Something doesn't seem right there. Let's take a look at the historical data for TSLY. Come on, historical data. And we'll look at dividends only. Okay. Take a look at all the dividends. Oh, look at that. Not even a year and a half. So they started up in January 2023. So a year and a half, that's all the dividends they've paid. So yeah, of course. So, but look, $2, 181, 180, 166, 88, 161, 213, 166, 117, 115, 117, 121, 81, 68, 69, 65. Yeah, those are horrible. Okay, not even 2 years of dividends. Okay, so I ask you again, ETF, electronically traded funds. I got to find a good acronym for ETF. Other than, hey, I don't want to do it, you do it. Okay, so that's my take on ETFs, because most of them are basically the exact same. You know, giving your money over to a machine. The machine does it for you. The machine is crap. Okay, JEPI. Okay, monthly. I've never seen a monthly that pays more than 30% per year. Okay, let's go to some more of these questions. Doc, how's it going? SCHD, we just picked on you guys. SCHD, uh-oh, where am I? Uh-oh, wow, I missed all these questions. Uh-oh. Oh, there you go, SCHD, okay, I guessed. Evan Clark, how do you know what clout means? Dictionary? Look in the dictionary. What does clout mean? Okay. QDTE. Can you? It pays weekly. QDTE. QDTE. Another electronically traded funds that has monthlies. Okay, I've never seen a monthly that actually pays. It's at $45. It's going for $47. The 47s are going for, I don't even, can't even figure that number out. All right, so QDTE. QDTE. Okay. They only have dividends this year. That's it. Just this year. QDTE. It's not even a year old yet. Okay, March 2024. Okay, that's when they first started paying dividends. March 2024. Not even a year old yet. So I don't know why you're so excited about it. All right. Now, I can't do a summary on it because there are no numbers on something so new. All right, change to landscape on YouTube. All right, Jeff, I can't help you out with that one. Instead of selling covered calls, why not sell put options? All right, Will, you might be new here. I don't do put options. I don't like the negative vibes that come with it. Sorry, I'm just weird that way. You know, I like things on a positive. You ever hear that expression, garbage in, garbage out? A put option, you're obligating someone to do something, and that doesn't sit well with me. Sigmal, how you doing over there on Instagram? Okay, so no, I don't do cash secured puts. I don't do put options at all, anywhere whatsoever. 1 or 2 strikes out of the money, nope. Edward, someone bought $10,000 worth of Ribbon call options today for a cent contract, and tomorrow it 2 million. Okay, no idea. I don't do Rivian because they don't have 20 years of increased dividends. Now, maybe that person knows something that we don't know. Okay, there's always that possibility, but that is speculation. I don't like speculation. I'm 60 years old. I'm retired. I want safe, predictable, consistent, and no risk at all. When I say no risk at all, I'm talking about companies that are 50 years or more older. Over 50 years. That means if you're increasing your dividends for 20 consecutive years, that means you at least know what you're doing. Okay, if you have money and you want to put it wherever you want, hey, that's your prerogative. Okay, I put my money in a company that is reliable, it has historical performance by it, and it has consistently increased its dividends. And the only way to increase your dividends is to continuously be profitable. Okay, if you're continuously profitable, well, then you're running the company properly. That way you share your profits with your investors, and that's what I'm looking for. I'm not looking for speculation. I'm not looking to buy something for $1 and hope it goes up to $200 or $300. If that's what you're looking for, you are definitely in the wrong place. Your sound just got much better. I have no idea what that means there, Al. I mean, I know what it means, but I have no idea what stock is this? Oh, this is QDTE, which is an ETF. It's not even a year old, so I really can't give you any perspective on it because it would never come across my desk. Same list he added T-Mobile, I think. Okay. What site are you using to see this? Well, this is Thinkorswim, which is offered through Charles Schwab. Now, Charles Schwab bought TD Ameritrade. TD Ameritrade bought Thinkorswim. Thinkorswim, this trading platform, was created by a professional trader. It's some cool stuff on here. That's why I like it. Randy, but a rising stock isn't what you want selling a call, right? Randy, I personally don't care. I mean, it's hard for people to comprehend this, okay? I personally don't care if the stock goes up. If the stock goes up, great. I'm happy for the person who bought the call option because it's going up. He's making money, I'm making money. My only main concern is, do the numbers work? If I'm buying it for 47, I'm selling it for 47, am I making my 1% for the week? So if she stays the exact same and goes flat, I'm making my 1%. If she goes up, I'm making my 1%. If she goes down, maybe I'm not making my 1%. You know, so it's all a little bit there. What site? It's Think or Swim, L. QYLD. Didn't we already take a look at QYLD? Okay, QYLD is the same category as JEPI, SCHD, VOO, and CONY. All the exact same. Not much different. You can even, as a matter of fact, you can go back to YouTube. No, sorry, not YouTube. Yahoo Finance. And what did he say? QYLD? QYLD. Okay. ETF. Okay. Again, not that old. It started paying dividends in 2022. So what is that? 2 years of dividends? Why would I want to do a company that's only 2 years old? Okay? I can fix that. VOO, same thing. Okay? Same exact thing. As a matter of fact, you go here, holdings. Let's find out exactly what is QYLD. Take a look. Microsoft, Apple, Nvidia, Amazon, Meta, AVGO, Google, Costco, Tesla. Okay, that's QYLD. Okay, let's take a look at VOO. VOO, check it out. Microsoft, Apple, Nvidia, Amazon, Meta, Google, Berkshire Hathaway, Eli Lilly, and JP Morgan. Very similar. Okay, SCHD. SCHD. Okay, Schwab, SCHD. Oh, look at that. Texas Instruments, Amgen, Lockheed Martin, Pfizer, Chevron, Coca-Cola, Pepsi, Verizon, Cisco, and BlackRock. It tells you what's in it. Okay, so you got to ask yourself, is this where I want to put my money? What kind of return are they giving me? And can I do better myself? Okay, I can fix it. VOO, yeah, that's a no. QYLD, that's a no. Does the premium go down when a stock goes down? Simba, you're absolutely correct. Now, here's something fun you guys will like to take a look at. Oh, I can't make that any bigger. Oh, I wish I could make that bigger. But this is the Black-Scholes formula. See if I can make that screen bigger. No, I can't. let's get out of there. But here it is. Check it out. Here's the formula to make the option pricing. Is that confusing as hell or what? It is. It's confusing as hell. But long story short, okay, as the stock price goes up, as the stock price goes down, so does the option pricing. Okay? Now, the option pricing has a lot to do with the current stock price, the time frame to expiration. Okay, so 19 July 24, that's the third Friday of July, which is 24 days away, which means it has 24 days of value. Okay? The stock price is what it is. The time value is what it is. What's different? Well, the only thing different then is going to be the current interest rate, the current implied volatility, the current outstanding amount of shares that are out, not shares, contracts. A lot of things fall into place. Once you take a look at that Black-Scholes pricing method for options, it's a freaking huge computation to figure out the pricing. I just look at it. What am I buying it for? What am I selling it for? Is it 1%? How much time do I got left? So yeah, I don't do monthly, so that's a bad one to give me an example. But let's go some more questions. Exchange traded funds, ETFs. Yeah, Jonathan, I don't do those. Sorry. So what if you are stuck with loss and you don't sell options? Alan, you can always sell options. You always have choices on what you can do. Okay. So Jonathan, you're saying not electronic exchange? Well, ETF, electronic, it's the same thing. Okay? An exchange traded fund, electronic traded fund, exact same thing. The exchange is basically a bunch of computers. What's a computer? Well, it's electronic. Okay? You don't have people actually deciding what to buy, what to sell. It's an exchange traded fund, ETF. Same thing. Okay, Michael, how do I start learning to trade with minimum account? Michael, your best bet is just come back every night. Okay, I'm here every night, 9 p.m. to 11:30. Okay, ask questions, learn what you can. If you're having an issue, DM me with your phone number. I'll give you a buzz. I'm here to help people. I could care less about other things. But, you know, if you leave me a number, make sure you answer your phone. Because, you know, people leave me their number, I call and get an answering machine. Or I get no answer. How long have you been playing the game, Pops? Oh my goodness. Imposter, really? Over 20 years. Do I do penny stocks? No. Tap on the screen. There you go, tap on the screen. I don't know what that means, Albert. When do you roll positions usually? Yep, right around 3 p.m. on Friday. Because I have 6 different accounts. So I have to, you know, when I do the live trading on Friday, it's 3 p.m. But the other accounts, I'm usually on around 2 to make sure everything's evened out. Because 3 to 4, I dedicate to all of my students. How much money should I have to go full time? Harry, that's a decision you have to make on your own. First question you need to ask yourself, Harry, and this is for all you people that are new, is does this make sense? Buying a good quality company at a certain price, at a certain date, collecting the premium, collecting the dividend, and then moving on to the next one. It's like putting all your stocks in a revolving door. Let me give you a quick example. What do I mean by that? Okay, so here we are looking at Warren Buffett's list. So the first, it's the last week of May, T-Mobile. Ask yourself, do I like T-Mobile? Well, I like T-Mobile. Well, here's another one. If T-Mobile is good enough for Warren Buffett, well, it should be good enough for me. Okay, so let's say hypothetically I buy T-Mobile and I make 1% off of T-Mobile. Well, let's say I make a 0.5% off T-Mobile, and it's relatively easy. All right? Let's bring it up for a second. TMUS. Okay, so T-Mobile at this moment is going for 179. So the 180s is the closest. That's 37. That's 0.5%. Ugh, that's horrible. I wouldn't do it because the number doesn't work for me. Let's pick another one. Oh, KHC. That's going to be another one. It's going to be horrible. KHC. Here we go. 32.90. Oh, wait a second. You know what? Let's get rid of the 28th of June because there's only 3 days left. And let's just look at next Friday. Next Friday is the 5th of July. Okay, so the 32.90, the 33s are going for 26 cents. All right, that's like 0.75%. Can you live with 0.75%? Well, let's figure it out exactly. So we're talking apples and apples, all right? So the 33 is going for 26 cents, and it's costing me 32.90. That gives me a grand total of 0.79. Okay, so it's close to 0.8%. Multiply that by 52 weeks, because it's 52 weeks in a year. It's still 41%. 41% for the year. I can deal with that. Okay, so here's a question. All right. KHC is right here. Well, let's say hypothetically I like KHC is paying 0.8%, which is a little bit less than 1%. Okay, but fine. All right, so this week here I get 0.8%. All right, next week I have 4 to choose from: Occidental Petroleum, Hewlett Packard, Boyd Gaming, or Coca-Cola. So I'll take a look at each 4 of them. Which one's going to pay me the best premium? Now, I like them because they're on Warren Buffett's list. Why wouldn't I like them? If it's good enough for Warren, it's good enough for me. Point blank. Do I need to look at them? Do I need to know why? No, I don't. Because if Warren Buffett is investing his money, shit, yeah, I'm going to do the same thing. But that's me. Okay, but, so if I'm picking up, let's say, 0.8 here, picking up a half point here, picking up a point here, another point there, whatever, so on and so forth. Every single week I'm bringing in something. Now, most people buy a stock and just get the dividend once every 90 days, but their money just sits there. What happens to a stock? Well, let's take a look at KHC, okay, which is Kraft Heinz. Okay, we all know who Kraft is. They make Kraft macaroni and cheese, Heinz ketchup, Heinz 57 sauce. They make a lot of interesting stuff over there. But let's take a look at the actual numbers. If I bought it and held it onto it for a year, well, look, a year ago it's at 36. Then she dropped down to 31, then she shoots up to 38.50, and then she drops down to 34, then she shoots up to 39, now she's at 32. She's all over the place. But hypothetically, if I bought it anywhere along there, I'd still collect the dividend every 90 days, regardless of where the price is. Because I really don't care about the price. And that's weird. It's hard for some people to comprehend. Because my main concern is, let's look at Kraft for the last 30 days. 30 days, so we look at 525. 525. Here we go. Okay, so for the last 30 days for Kraft Heinz, check it out. 30 days ago, I'm over this side. 30 days ago was the 30-day high. Okay? And then she drops, pulls back, drops, pulls back. So what's going to do now? Well, now it looks like she's going to drop again before she shoots back up again. That's what it looks like. Is that guaranteed? No. But what else do we have up our sleeve? Well, we have this right here. This is called seasonality. This, my friends, the blue line represents the movement this year. This is exactly what Kraft Heinz did this year. January 1st, December 31st. The red line is 10 years of historical data. 2014, 2015, 16, 17, 18, all piled up on top of one another to give us an idea on average what has Heinz ketchup done in the last 10 years during this time frame. Well, between 625 and 75, that's what, 2 weeks? Basically sideways. Not big up moves, not big down moves. Well, I like that for me, for this strategy. Because when the stock goes up, I make money. Stock stays the exact same, I make money. The stock can even go down a little bit, and I'll still make money. And we're going to show you that in just a little bit. But let's get out of here and get back to what we were looking at. Okay, so as I'm saying, if you get a decent set of companies, now if you got a pencil, a piece of paper handy, you ready? I'm going to give you a great list to check out. Go to Google, Bing, whatever your search engine you're going to use, and look up Dividend Kings List 2024. 54 companies that have increased for 5 decades their dividends to their shareholders. Dividend Aristocrats, I think the 67, I'm not 100% sure, but somewhere over 60 stocks that have increased for 25 consecutive years. Dividend Champions, 150 companies that have increased for over 25 years. Dividend contenders, that's list number 4. 10 years to 24 years of increased dividends. That's 300 different companies, all consistently increasing their dividends year after year after year. Now, those 300, I can't guarantee all 300 have weekly options, but I know the Dividend King, well, most of the Dividend Kings, Dividend Aristocrats, Dividend Champions, and so on and so forth, I know they have weekly options available. That's what I'm looking for. So, Harry, to finish your question, first, my suggestion would be paper trade. Okay, go download Thinkorswim onto your computer. Okay, come back every night, see what it is I'm doing. Okay, now I've been doing this for 15 years, so I'm not, you really don't have to join up today because I'll be here next week, the week after, blah, 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 all that kind of stuff. Now, practice. Now, you can do a virtual account. They have a lot of places online that you can do virtual trading. Okay, it's kind of like Monopoly for the stock market. Okay, so you paper trade for a while, and when you're good at it, then start throwing money into it. Okay, just to let you know, 98% of all my money is invested at all times. Why? Well, because what else am I going to do with it? Do I have cash reserves? Yeah. Well, I got about maybe 2,000 or 3,000 cash reserves. Why do I need more than that? Because I have a debit card and a credit card attached to my trading account. So anytime I need something, now I'm an adult, I'm over the age of 18, I don't have surprise bills. I don't. Cell phone bill comes once a month. Mortgage, rent, whatever, once a month. Electric bill, once a month. Okay, the only thing I do once in a while, take my grandson out or take the kids out, something like that. That's what I have a credit card for, which is attached to my trading account. So anytime I need money, first thing in the morning, click, 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 transfer, good to go. Other than that, I take a whip to my money and I make it work for me consistently. Might not be right for you guys, but to answer your question, Harry-O, practice first before you get started. Okay, once you get good at it, think about joining. You can ask any questions you want. I'll guide you through it. I can't tell you what to do, but I give you my opinion on things, kind of like JEPI, no. SCHD, no. VOO, no. Coney, no. TSLY, no. Whirlpool, yes. AT&T, yes. General Motors, yes. Ford, yes. Microsoft, yes. IVR, no. PHK, no. DMPL, no. It's really not that difficult. Don't make it any more confusing than it needs to be. Okay? Number 1, pick your list. Find a good company that you're okay owning long term. Understand what they do. Understand what their finances are. Make sure that they are profitable. Why would you want to give your money to a company that's not profitable? Well, how do you know if they're profitable? Well, if they're profitable, they're going to share their profits. And if they're continuously profitable, their profits will continue to grow on a yearly basis, year after year after year. Okay, the dividend contenders, 10 to 24 years of increased dividends. The dividend kings, 5 decades. Can you imagine that? 5 decades of increased dividends. There's a company called GPC, Genuine Parts Corporation. 7 decades of increased dividends, year after year after year after year. What do? They make aftermarket auto parts. There's nothing sexy about aftermarket auto parts whatsoever. You got brake pads, windshield wiper blades, air filters, oil filters, spark plug wires, weird stuff. But they've increased their dividends every single year for 7 decades. All right, so I'm a firm believer if it's a good company continuously increasing their dividends, that means they're continuously profitable. They continuously know what they're doing. Okay, that's where I want my money to go. And if I can get 1% every week for them, whoa, I'm a happy camper. All right, let's go through more of these questions. All in TSLY. Well, good for you. I don't like TSLY. Now, why is it I don't like TSLY? Well, we already figured that one out. TSLY. Whoops. LY. All right. Historical data. Okay. Dividends only. Okay. We've already figured out TSLY is not even a year old. Okay? If you exposing first, okay, exposing first, if that's okay for you, hey, more power to you. But take a look. These are all the dividends they paid. Look, they started out giving you 213, then they went to 166, 117, 115, and slowly decreased. The older and older it gets, the less and less profits they're giving you. So you're throwing your money at a company that one year old, started out with a bang, and now it's getting worse and worse as time goes on. Don't look at me. I'm just reading the numbers. Okay, 213. That's the highest dividend. That was month number 1. Then it went to 166. Okay, 117, 115, then it's slowly down to 65 cents. They started out at 213. Now they're giving 65 cents a share. And you think that's a good one? What the hell were you thinking? I mean, think about it. They're going backwards. Why are you giving your money to a company that's going backwards, not increasing in value, not increasing with profits? Okay, that's just my take on TSLY. Okay, so enough of that. Let's take a look at some more. Energy transfer. Ooh, that's a nice one. Invesco. That's a no. Yum. Now, here's an interesting thing about Yum. Y-U-M. Yum Brands used to be a dividend king. Used to be a dividend king, which means some bright CEO, probably from Harvard or Yale, came in and said, hey, the executives can make more money if we cut their dividends consistently year after year. And then for some strange reason, they cut back on the dividends. They got booted off the Dividend Kings list. Where are they now? I have no idea. But I don't think I bought Yum Brands in quite a while. Invesco. All right, let's take a quick gander at Yum. Y-U-M. It's a monthly, it's a no. Invesco, I can fix that. You got to give me a ticker symbol. ET, Energy Transfer. Okay, now Energy Transfer is going to be a no. Now here's the reason why it's a no for Energy Transfer. Okay, 2 reasons. Reason number 1, are you ready? $15.99 is what I can buy it for first thing in the morning. $16 means I'm only getting 12 cents per share. That's less than 1%. Last 30 days. Right here. Check it out, last 30 days. Here we are, 15.40. She goes up, she comes down. She goes up, she comes down. Now she's at the all-time high. That is a no. I never buy at the all-time high because you're standing on a ladder waiting for someone to bring you a taller ladder. Makes no sense. Okay? You make money by buying low and selling high. Not buying high and waiting for it to go higher. It may never go higher. It's at this moment in time, if it was worth $17, it would be $17. If it was worth $20, it would be $20. But it's not. It's at 16. Okay, I can fix that. You got to give me the ticker symbol. Because Invesco most likely going to be a no. Okay. Do you venture outside the aristocrats for your cash flow? Of course I do. Don't think he's reading TikTok comments, maybe his Discord channel. No, I'm reading the TikTok comments. It's just there's so many of them, I got to go them as they, I got, what do you call that? ADD. So anytime, so I got 4 cameras going. So one over there, I get my attention over there, and then go over there. So I'm going as fast as I can. Traded Troy, how you doing? Been a while. I am doing the comments on TikTok, just take me a while to get to them. I like to sell my own options to create my own dividend by collecting the premium every week or every month. Well, that's an awesome idea. You and I should chat because I'm always interested in taking a look at what other people are doing, provided they are doing better than what I'm doing. So you're doing something that looks interesting to me, and I would like to know more. If you want to DM me your number, I'll give you a buzz. We can chat. See how we can help each other and help other people. My main focus, I want to help other people because, I'm from the poor folks. I was born into a single mom with 6 kids. Single mom with 6 kids. Yeah, living off of government, government handouts. Yeah, in the 60s and 70s. Yeah. Nice thing that none of us are depending on the government anymore. We all have our own houses. We all rather well, except for my brother. He's, let's say he's different. ENB. Mac, never heard of ENB. Baxter. Ooh, I like Baxter. Let's take a quick look at ENB. ENB. Enbridge, that's a no. Okay? Now, I'm trying to tell you that I only like companies with weekly options. Okay? 35 is going for 50 cents. Okay, that's over 1%. Okay, it's what? Let's find out exactly what it is. It's a 50-cent premium. Okay, so we take the 50-cent premium and we divide it by the purchase price, which is 35, and that comes to a grand total of 1.4%. But wait, if you order now, you get 2 for the price of 1. I'm going to divide it by 4, because how many weeks are in a month? Well, there's 4. So we divide it by 4. Now I'm getting 0.35. So explain to me, Mac, explain to me why 0.35 is better than 1% per week. Because 0.35 multiplied by 52 weeks gives me a grand total of 18.5%. Now, 18.5% is not bad. Not many people get 18.5%. And if you can do ENB every week, every month, and collect that 1.3% every month, well, you can get 18% in a year. But for me, I like 1% per week, because 1% per week is over 50% per year. And I like to look at my account every day. Why? Well, because I'm retired, I need something to do. Okay, so I get up, it's part of my routine. I've been doing it for over 20 years. It's not a big deal for me. When I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, that means I spend less than 10 minutes a day on my personal account. Now, I do trade for other people. That takes me a little bit more effort, but then again, they pay me to take care of their accounts. Oh, I needed that. All right. Okay, so ENB is a no. Sorry. BAX, B-A-X. B-A-X. Baxter International. Now, first thing I want to see, what can I buy it for? 34.23. Okay, the 34s are going for 45 cents. I'm losing 23 right off the top. Take 23 off of that, and I end up with 22 cents. That's going to be a no. The number just doesn't work for me. Sorry. That was Bax. So I'm busy that weekend. Alrighty then. Jessica, thanks for your input on IVR. I'll be looking around for another stock with the increase, I promise. Okay, Jessica, I'm here every night. Okay, now I just started doing this, so if you want to take a look at my older videos, you'll see that I haven't been doing it very long. Now the live shows I've been doing since the beginning of January. Okay, now I committed myself to continue doing it to the end of the year. That will be a full year, and I've only missed 2 days so far. So we're halfway through the year. I've only missed 2 days, 9 p.m. to 11:30. Okay, so SPY and QQQ, Albert, that's going to be a no, and no. Sorry. Why don't I like SPY and QQQ? We're going to get to that in a second. But Jess, if you want to come back and keep asking questions, if you're thinking of investing into something and you want my opinion, fine, I'll give it to you. But remember what I'm looking for. Okay, I have no idea what you're looking for, but what I'm looking for is a safe, predictable, consistent 1% ROI per week on my invested dollars. That's what I'm looking for. And for that, I'm willing to commit 10 minutes a day to, one, find a good company. That's easy. Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list. Right there, it's over 150 companies. That's more than enough to choose from. Okay, because you got to remember, once you go by the numbers, there's 365 days in a year. There's only 266 trading days, 4 quarters. Okay, each quarter has 90 days. January, February, March, April, May, June, July, August, September, October, November, December. Each quarter has 66 trading days, which is only 13 weeks. So if you have 150 stocks that continuously increase their dividends for more than 20 years, well, that's great. And they have weekly options. Great, now you have 150 companies in a 90-day trading period or 66 trading days. Well, that means each week, there's 13 weeks, there's over 10 decent companies to choose from. 10 companies to choose from. So once you do that, you're getting to look something like this. This is Warren Buffett's list. He doesn't have as many as I do. Okay? Here's mine. This is one of mine. Okay, Baxter, which we just looked at, eBay, GLW, that's Corning, NEE, J&W, that's Nordstrom's, Newmont, Halliburton, Kraft, Bank of America, General Motors, Pepsi, Kimberly-Clark, Waste Management, so on and so forth. These are all good, decent companies that continuously increase their dividends. They're the only ones I want to look at. So Albert, let's pick on you for a little bit. Why is it I don't like SPY, and why is it I don't like QQQ? SPY. Number one reason I don't like SPY is doesn't pay dividends. So when it goes down, not if, when, check it out. Okay, last July, 425. She was up 460. And what happened here? Uh-oh, she went down. Then she went up, then she went down, then she went up, then she went down. Now, here's the question. When spiders go down, what am I bringing in? Nothing. Okay? If I bought it at 544 and it drops down to 200, what am I bringing in? Nothing. So why would I buy it? That's reason number one. Reason number two, it's over 500 bucks. I don't buy anything over 300. Definitely don't even look at anything over 300. Why? Well, I'm not as rich as you might think. If you think I can get 1,000 shares at $544 a share, yeah, you're smoking something that I'd like to have some. But needless to say, I like sticking to stocks for the average guy. Okay, because I'm just an average guy. $250 per share or less. Because then it makes it affordable for me. Qs. QQQ. Same thing. Okay? Over 400 bucks. Yeah, no thank you. And look at where it is. It's way up at the high. Spiders was the same thing. Also, Qs doesn't pay dividends. So when, it's not an if, it's when, same thing. Look. Up, down, 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 up, down. That's all it does. So when it goes down, it's not if, it's a when. Okay? Never an if, it's always a when. When it goes down, what am I bringing in? All right, so it doesn't pay dividends. I don't want nothing to do with it. Safe, predictable, consistent 1% per week with a good quality dividend stock. All right, Albert, hope you got that one. What do we got next? PDI. Daniel, what the heck is PDI? PDI. No options, that's a no. Okay, remember what I say? 20 years of increased dividends and weekly options. If there's no weekly options, it's a no. All right, Ramald. Main, M-A-I-N, M-A-I-N. Monthly, that's a no. Because monthly just doesn't work. Okay? 49.89, 49, wow, it doesn't even have a 50. 49.70 is going for 45 cents, which is about 1%. Cool! But for 4 weeks. So I can take that 1% and divide it by 4. Now I'm getting 0.25% per week. You're getting 1% per month, which comes to 12% per year. If you're okay with that, fine, great. It doesn't work for me. I don't like Maine. Never have. It just doesn't pay. Uh-oh. Damn it. La, 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 la. Wow, I'm missing a lot of these. QYLD's a no. Options XYLD, same thing as a no. I can fix that. You're still reading from top down. Scroll to the bottom and start there. Yeah, well, I got to go from the top down because that's how they come in. How often do they pay a fee, dividends? Most companies pay dividends once every 90 days. Okay, you have some companies pay once a year, some pay twice a year, some pay 4 times a year, and there are a few that pay every single month. Whirlpool, yep. Are you okay with K1 tax reporting on ET? Sorry, David, Craig David. Let's look at ET for a second, ET, because I thought ET was out of the question. Oh yeah, ET, nice. Okay, from 06 They're slowly increasing. Nice. I like that. Consistently increasing. That's lovely. Uh-oh. They cut their dividends in 2020. They were 31 cents per share in 2020, and they cut them in half to 15 cents a share. Okay, now we're at 32 cents a share. Okay, not that bad. SCHD Hunter, we already talked about that. That's going to be a no. Sean, thank you for sharing your experience with us. Hey, Sham, way to go. Mama said, knock you out. Way to go over in Instagram. Okay, so Hunter, we've already went over SPHD. What the heck is SPHD? SPHD. Oh, it's another ETF. Wow. 15, 14, 13. 2012, which means they've only been increasing their dividends for 12 years. Hunter, okay, SCHD has dividends for 12 years. Has dividends. Have they increased? Well, they went from 10 to 12 to 9 to 10 to 8. That's not increasing. 8 to 9 to 10 to 2 to 9, 9 for a while, to 10 to 9 to 10 to 11, 11 to 12 to 25 to 10 to 12 to 14. There's no consistency here whatsoever. 16, 15, 14, 11. Yeah, I'm going to say no to SPHD. Number one, it's not 20 years of increased dividends. I mean, yeah, they have 12 years of dividends, but they're not continuously increasing. What does that mean? Well, they're basically going nowhere. Because, hey, we sold 1,000 units last year. Well, how much we sell this year? We sold 1,000. That's not increasing. That's staying the same or going backwards. So sorry, SPHD is going to be a no. 16, 16, and ET. Okay. SPHD. All right, ET. Yeah, ET was good. But look where ET is at the moment. Okay, and this is why ET is a no. I don't remember who said anything about ET. Okay, Craig David. Okay, this is why ET is a no this week. All right? Here's your high back in the beginning of May. Okay, so down, up, down, up, down, up, down. Look at where we are now. 1, 2, 3, 4, 5, 6. 6 days of up. Okay? There's going to be profit taking somewhere. So do I want to buy it? CDR. I didn't get to read that. Sorry, Sham. I didn't get. You got to write that again because YouTube puts it up there and it's up there like 2 or 3 seconds and it disappears. So, Craig, David. Okay, see where we are right here? She shoots on up. There's going to be profit taking soon. So I want nothing to do with the profit taking because we're Tuesday. So tomorrow's Wednesday. Okay, so this week's options, CGGR, never heard of them. CGGR, we'll take a look at that in a little bit. All right, so ET, what were we talking about? We're talking about something. Oh, yeah, okay, so $15.99, the 16s are going for 7 cents, just 0.5%. That's for this week. That doesn't cut it. Okay, next week, here's the change you got to take on next week. Okay, the 16s are going for 12 cents. Still not 1%. But now you have 5 days of next week, 3 days of this week. So here's a question. And this is one you really got to ask. I don't think you're asking this question. If I buy it at 16, okay, and I sell next week's, I have 8 days. Do you think this is going to go up for 8 days or stay the same for the next 8 days? Probably not. She'll probably go up. Maybe she might go up a little bit, but then there's going to be profit taking because that's all companies do. If you take a look, up, down, up, down, up, down, up, down, up, down, up. Look at 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days before she dropped. You got 8 days here already. Okay? So I like looking at the 30-day time frame because it gives me an idea of what we, the buyers and sellers, are thinking. So if we're thinking, hey, she goes up, let me take some profit. Okay, profit's done. Now it's cheap again, let me buy some. Oh, profit taken. Cheap, profit taken. It's all the same. However you want to call it. Goes up, retrace. Goes down, rebound. Whatever you want to say. If it goes up, it goes down. Right now, it's going up. Great. If you think it's going to continue without profit taking, go ahead, be my guest, jump in. I like to buy it down here because you get your high here, 4 days to the downside, Once it turns and starts going up, that's where I want to jump in. That's why I look every day, and I only look at certain stocks. Okay, those are the ones that have continuously increased their dividends. Why? Because if they continuously increase their dividends, they're continuously profitable. They continuously know what they're doing. I want to bet on a winning horse. Okay, don't get me wrong, a long shot's nice, but how often does a long shot come in? All right, more questions. Craig Wisniewski, yes, I remember that. How you doing? Sergio, risk reversals are great. Yep. Do you trade futures? I used to, not anymore. But is he behind on comments? Yes, I am behind on the comments. How do you find companies with weekly options? There aren't any companies that pay weekly options. Okay, we're talking about weekly. Wait a minute, weekly options. Yeah. Oh, sorry about that. I thought you talked. Okay. So, what's that? Elijah Angels, CBOE, Chicago Board of Options Exchange. CBOE.com. You go there and say, what companies have weekly options? You can put it right in the search bar. You can go to Google, what stock companies have weekly options? Give you a whole list of them. I can fix it. I mean, for your brightness, you can view the full screen on YouTube. Yes, you can. I can fix that. That's what I'm saying. Pop's got to scroll down to the bottom and back and forth. Yeah, I can fix that. Well, I don't know. It is what it is. Okay, thanks. Okay. Craig, that right? No, Chirag. Thoughts on FDX? Numbers weren't that great to move the stock that much. FDX. I like FedEx. It's actually on my list. FDX. 256. Okay. That's going to be a tough one. Why is it going to be a tough one? Well, the last trade was 256.38. Look at the bid, 291. The ask, 292. So how am I supposed to give you a good readout if these numbers are so skewed? Okay, the 292s, yeah, not really. Because I really can't give you a good number on that one. Sorry. Okay, because when the market is open, okay, the bid and the ask are usually 2 to 3 cents difference between the bid and the ask. This is just freaking ridiculous. And the market makers do that every once in a while to throw us off. Daddy, what's the difference between bid and ask, or ask and bid? Well, here you go. I was just saying that. The bid, if I already own the stock and I want to sell it, I'm getting this, the bid. That's what I'm collecting. If I want to buy it, I am paying the ask price. The difference between the bid and the ask is called the spread. Who gets the spread? The market maker gets the spread. Who's the market maker? He's the store owner. Let's think of him as the corner store owner. Circle K, Quick Mart, Walmart, Circle K, Quick Stop, 7-Eleven, one of those type deals. Somebody owns that store. Okay, they're gonna buy a dozen eggs for $1. They're gonna sell them to you for $1.50. They're gonna buy a gallon of milk for $3, sell it to you for $3.50. They're gonna buy a loaf of bread for $1 and sell it to you for $1.25. What he pays for it, what he sells it for. The difference between the two is the spread. And during trading hours, the spread on a stock, especially one that trades 6 million shares a day, 6.31, okay, would be 2 or 3 cents per share. Okay, this one, it's kind of freaking ridiculous. But anyway, sup, mijo, Albert, way to go. UPS. Who said UPS? That was Elite Style Garage. Okay, UPS is interesting. 137.50. 137 is going for 120. Yeah, and it's 70. Yeah, sorry, the numbers just don't work. Sorry, not 1%. That would be a no. Don't get me wrong. I like UPS, just not this week. Okay, because the numbers don't work this week. Now, do they always work? Yeah, sometimes they work, sometimes they don't. We're going to find companies that pay a good premium, and we're going to find companies that don't pay a good premium. And it's always different. That's why we look all the time. Scotch, M-O, that's Altria. Okay, now for those who did not know, Altria, MO, is a dividend king. Means they've been in business and continuously increased their dividends for over 5 decades. They've been in business for over 100 years. Let's take a look at the numbers. 46.45, the 46.50s are going for 40 cents. All right, that's just a little bit under 1%. Fine, that could work. But look where the chart is. Okay? Beginning of May, she's down at 43. Then she jumps up, pulls back, jumps up, pulls back, jumps up. Now she's getting ready to pull back. So for those of you who like puts, perfect opportunity to buy a put. Because she's going to go down, hypothetically speaking. What's your opinion on Ribbon? Ribbon doesn't have 20 years of increased dividends. I won't look at it because it's not worth my time. Okay, now, I don't mean to sound sarcastic. I don't mean to sound elitist. I don't mean to sound anything in particular. Okay, I'm not into this name game crap. The company is, they may make a good vehicle. They may. I don't know. All I know is they don't have 20 years of increased dividends. Okay, so if they don't have 20 years of increased dividends, why would I want to put my money into it? Now, you can put your money into anything you want. It's totally up to you. All right? Now, when I invest my money, I want to make sure it is a profitable company. The only way I can tell if it's a profitable company is if they continuously increase the profits that they share with their investors. Now, when I buy a stock, I become an investor. When you buy a stock, you become an investor. Now, they're either going to increase their dividends or they're not. Or you might buy one of those companies that don't pay dividends at all. And that's your prerogative. But for me, I want a continuous, safe, predictable, consistent 1% per week. The only way I'm going to be able to do that is with a company that is continuously increasing its dividends every single year after year after year. All right, so sorry about that, Elmer. How do I find them? Oh, you're right. Here we go, man. Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list, and Dividend Contenders. It's over 300 companies right there. You're looking at BAX, looking at the price now, it's really $34 and it's also midweek. Does it fit the other criteria? Well, yes it does. Baxter's on my list. BAX. Baxter International, it's over 100 years old. They are continuously increasing their dividend. They are on my list. Right at the moment, it's 34.23. The 34s are going for 45. That's next week. Yeah, it works for next week. All right, but take a look at the chart. Okay, 30 days ago, or 90 days, was that beginning of April? Down, up, down, up. Look where it is now. Let's take a look at the last 30 days. Last 30 days. Look where we are. Now, there's a huge difference. Did you see that? Let me go back again. Okay? Now, March. Beginning of March. Right here. Look where it is. Nice. Down, up. Here's your triple high at $44 for Baxter. Pulls back, goes up. Gets that $44 again. 4 times it hit 44. Great. Well, we know where the top is. She pulls back, up, down. Look where it is. It's in a downward trend at this moment, looking at this particular chart. So if I want to go to the last 30 days, because the last 30 days is going to give me an indication of where it's going next. Well, take a look. Here it is. Down, up, down, up. Oh, where's it going now? Down. Okay. I missed a whole bunch of questions. Okay, MO, we looked at that one. Gallant wants to take a look at Walgreens. We like Walgreens. Why do we like Walgreens? Because Walgreens has been very profitable for us this year. And you may take one quick look at that chart and say, oh, hell no. But let me give you a little clarity, okay? A little bit of clarity on Walgreens. Right now, $15.75. The 16s are going for 58. That is more, that's almost 3%. 3%. So it looks like it's going down, right? Well, we're going to take a look at that. First, Walgreens is over 100 years old. Been in business for over 100 years. They increase their dividends consistently. Yeah, they're having a few bit of problems nowadays because of the current administration doesn't want to prosecute criminals. Okay, you can actually walk into a store, steal $900 worth of stuff, walk out, and nobody's going to do anything about it. So Walgreens is getting Walgreens, Macy's, um, a bunch of other stores that I know of in the news, constantly having people steal stuff. So anyway, it's going down. But here's the thing. A year ago today, 31.47. To the bottom of the year was the end of May. Okay, so let's go to the last 30 days right here. Here we go. Last 30 days. Big difference. Okay, last 30 days. 1620, the 30-day bottom. 1460 shoots up, profit taking, shoots up, profit taking, shoots up. Now we're into profit taking. So she's gonna come down a little bit before she turns around, goes back up again. Now, when you want to make money, buy low, sell high. This right here, the 1465, I think it is the low of the 7-year period. So right now, Walgreens, company that's been in business for over 100 years. Okay, they're one of the big drug dealers in the United States. Prescription drugs, you get CVS, Walgreens, Walmart. Just the big three. Okay, it's in almost every major city in the United States. Now, I'm hoping when the new administration comes in, they'll start cracking down on crime and start actually prosecuting criminals. Now, I'm from the old school, all right? I like the way the Muslims handle it. You got caught stealing, they cut your hand off. If you don't learn your lesson, it sends a clear message. You get caught stealing, you lose your hand. Makes you think twice about stealing. Okay? Nowadays, you steal something, they don't even give you a slap on the wrist. They say, don't do that again, that's not nice. Who's gonna stop after that? You walk in a store, you steal $900 worth of stuff, you walk out, nothing happens. Yeah, other countries, you get caught stealing, they cut your hand off. It makes you think twice. All right, anyway, more questions. John T. Bob, what stock did you sell? I sold Lowe's last week. ENB. Mac, didn't we take a look at ENB? Wasn't ENB a no? Enbridge, yes, we did look at ENB. It was a no because it's a monthly. Okay, Bob, I said I don't like monthlies because they just don't pay. The numbers just don't work. What stock are you talking about right now? ENB. Hey, Bob, James, what stock did you sell? Yeah, I sold Lowe's last week. ET, Sergio, we looked at ET already. Mac, we looked at ENB. Damn, I don't like ET. Well, I didn't say I didn't like ET. Okay? I did not say I didn't like ET. What I said about ET, here is the high of the year. Right there. That's the high of the year. She came down, went up. Came down, went up. Came down, went up. Came down, went up. Where do you think it's going next? Okay? So when I say it went down, now it's going up, I don't like 1, 2, 3, 4, 5, 6. 6 days to the upside. There's going to be profit taking. I do not want to be in the middle of profit taking. I don't. I will take a look at the stock. Not next week, but the week after. Because that's going to go up for a little bit, and then there'll be profit taking. That's going to be about 2 weeks. So what I'm going to do with ET is I'm going to write it on a list, not for next week, but for the week after. Okay? Because more than likely, all right, I like ET. Don't get me wrong. I do. I like ET. But high profit taking. High profit taking. High profit taking. High profit taking. High. Well, high is going to be profit taking. And after profit taking is done, it's going to turn around and go back up. That's where I want to get in. Okay? So I'm going to look at ET in 2 weeks. Not this week. Sorry. Not even next week. Keep going. He's short. Thanks, Sergio. I bought Leaps for 2006. Okay, good for you. James, you may. I have no idea what that means. What about ENB? Mac, we already looked at ENB. ENB is a no. Which platform do I use? This is Thinkorswim. 3M, ooh, like it. LEG, like it. VF, not so much. VF, what is VF? Yeah, Leggett and Plant, VF, okay. You Bobs, how long have you been in the game? Over 20 years. M.O., what's your take? I like Altria, but not this week. James, you may let everyone know what the color on the charts mean. Really? Color on the charts? Red means down, green means up. These blue lines in the back, that's volume. That's how many shares. Okay, that's pretty much it. All right, Gallant, you want to take a look at LUV, huh? I like LUV, Southwest Airlines. Interesting. I like the chart. The numbers, 2848 to 2850. Ooh, Gallant, nice pick. 2848. That's what I can buy it for tomorrow morning, 2848. So the 2850, which is 2 cents more than what I'm going to pay for it, is going for 60 cents. That's over 2% return for the week. So you guys are looking and say, well, always things no. Well, here's a yes right here. Now let's take a look at the chart. What is the chart telling me? Well, 5 things. There's a lot of 5s in this trading thing. 5 things. High, low, where was it a year ago? Where is it now? What direction is it going? That's all 5. Okay? That's the 1 year chart. Okay, everything looks fine. I want to take a look at this right here. I do. Okay, so I like the 1 year. Next, I want to take a look at the last 90 days. Okay, last 90 days. Here we go. First thing, remember? High, low, where was it? Where is it? What direction is it going? Okay, great. Now I want to see where a pattern is. Are there any patterns in the last 90 days, the last 3 months? Well, down, up, down, up, down, up, down, up, down, up, down, up. Okay, interesting. Well, now let's go to the last 30 days to see if we get an idea where it's going to be in next week. There's no real direction here. Sorry. I mean, take a look. There's no real direction. 30 days ago, right here, 26.50. 2 days later, we have our bottom at 24.60. She shoots on up, almost $30.40. She pulls back up, pulls back. Now she's going to the upside, but there's not much room to the upside. Okay? But there's no real rhyme or reason when it's that tight. Okay? So Gallant, yeah, it looks good. Let's take a look at seasonality. What does this thing normally do this time of year? Okay, so here we go again, seasonality. Blue represents the year, this year so far, January 1st, December 31st. The red line is 10 years worth of movement, January, February, March, blah, 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 2014, 15, 16, 17, so on and so forth. 10-year average movement. What can we expect in the next couple of weeks? Well, that's pretty plain to see. Gallant, you know, that's plain to see. Take a look. Here we are now. She's going to dip a tiny bit, which shows on the chart, and then she's going to go to the upside in the next couple of weeks. So yeah, the numbers work. Seasonality works. The only thing that's not 100% clear is this right here. Okay? Here's the high. Okay? See it gapped up. The gap already filled. See? Gap already filled. She went up again, pulled back a little bit. Here's where we are now. So she could possibly go to the upside from here. But your 30-day high is here. Okay? But what do we have for a 90-day high and a year high? Okay? Okay, so here's the 90-day high. So here's where we are now. Okay? Here's your 30-day high. Here's your 90-day high. And here's your high of the year. So there is the possibility for that thing to go up. But then you have that one question, the one that's bogging the back of your mind. Do I like Southwest Airlines? Do I like it at 24.48? That's the question. Me? I like it. It's going to give me 2%. Okay? Now, let's do a quick trade so you see how it actually works. So I like it at 28.50. So what I want to do, and this is why I say this screen is live on YouTube. This right here, what says single, I'm going to change that to covered. So it says covered call. So I want to do an actual covered call trade. All right? Now remember, I said I like it at 28.50. So here's the 28.50 right here. So I'll bring my cursor down. 28.50. See it? Right there? 28.50. Now these little tiny numbers over here, that's what I'm going to pay for it. So if I click on that, oh, look at that. It automatically fills an order for me. And what does the order say? Well, it says I'm going to sell 10 contracts at LUV $28.50 limit order, and that's the price I'm going to pay. Okay. Now it also says I'm going to sell 10 contracts, LUV 28.50. That's what I'm going to do. So what I want to do next is I want to hit confirm and send. When I hit confirm and send, that is the order. Now, once I hit this send button, that means I'm going to be filled. All right, so let's take a look at the actual numbers. First number I want to look at is I want to read the order, because seeing it is one thing, hearing it is another. So listen closely. I'm going to buy 10 covered calls, LUV, which is Southwest Airlines, 100. Those are the weeklies. Okay, 5 July 24. That's not this Friday, that is next Friday. Okay, next Friday. It expires next Friday. Okay, that means I'm going to buy the stock at $27.87. All right, and I'm going to sell the call to open to open. That means I'm doing 2 positions. The stock order is 1 position. The option order is another position. So it's 2 separate orders. Okay? Here's my break even. Okay? Important number to know. If the stock goes down to $27.87, that's my break even point. Anything over $27.87 is all profit. Well, where's the stock right now? Well, right now the stock's at $28.48. Okay, great. My maximum profit on this particular trade, $630 a share. Okay, bring out my calculator and go 630. Okay, that's my profit. What is it costing me? Because I have to buy something in order to sell it. So it's costing me $27,876. So I fill that in. $27,876. Okay, grand total of 2.26%. So that's 2.25% for 1 week. Okay, so you might be thinking, well, 27,000 is a lot of money. Well, fine, let's change it up. Let's take this out of here. Let's get this out of here. And let's do 300 shares. Okay, so 3 contracts. Okay, so now I'm only making $189, and it's costing me $8,300. Okay, so let's bring my calculator up again. Clear that. I'm making $189. Okay, and it's costing me $8,362. Oh, look at that. 2.26%. It's still the exact same amount of return. So the more money you have, you're not making more money, you're still making the same amount percentage-wise. So whether you buy 100 shares and make 2.26%, or if you make 1,000 shares and make 2.26%, it's still 2.26%. So if you have a $100,000 account, you're making $2,200. If you have a $100 account, you're making $22. The same percentage, the same thing. All right, let's go back to some more questions. I got to put everything back to 0. Okay, there we are. That because of their earnings tonight, I have no idea. All right, how about PAA and EPD? Oh, PAA, isn't that Plains All-American? It is, Plains All-American. 1754, okay. 1775, the 18s go, yeah, no, numbers don't work on PAA. Sorry. EPD, we already looked at EPD, and EPD was a no the first time we looked at it. Okay, 29.33, the 29.50 is going for 8 cents. Yeah, see, the numbers just don't work. Okay, and I never really heard of EPD. Now, Plains All-American, yes, I traded it once. All right, more questions, more questions. 86, how's it going? AVGO, wait a minute, isn't AVGO that expensive one? Or is that not that one? AVGO. Yeah, there's always some smart ass that wants to do something out of my price range. Do I invest in REITs? Not a whole lot of them, because a lot of them don't make it. Just filter out for high implied volatility. Yeah, Sergio, that doesn't work. Sorry. Not for this strategy anyway. He's looking for high premiums. No, I'm not looking for high premiums. Biggest loss ever, $91,000 in 1 week. It is what it is. It's a game. You know, you play, you play. Okay, Sergio, I'm not looking for high premiums. What I'm looking for are companies that have consistently increased their dividends for 20 years or more and have weekly options. Okay, when I find a company that has 20 years of increased dividends and weekly options and they're getting ready to pay their dividends, that's when I want to take a look at them. I will take a look at 3 companies this week, 4 companies that week, 6 companies this week, 10 companies that week, 12 companies this week, 3 companies this week. Okay, this week I've only bought 2. That's it. Okay, next week I'll probably buy 3 because I think at this moment in time, FCX, Kohl's, and Macy's are all in the money. So those 3 are going to go bye-bye, and I'll probably pick up just 2 more next week. Okay, so I'm not buying a whole bunch of companies on a weekly basis. I only bought 2 this week. That's it, just 2. All right? I get my 1% for the week, and then I'm out. I'm not looking at high dividends. I'm not looking at low dividends. I'm looking at consistency in paying dividends. Yeah, 91,000 lost in 1 week, yeah. ICE, never heard of ICE. ICE. Yeah, it's a no. Darth Vader. James, I did a covered call on Walgreens when you first came on. Well, got greedy and held the shares. Wave runner, sorry, dude. So, unfortunately, he won't look at it. I won't look at what? PHA cold. Chipotle, yep. No dividends and it's overpriced. Michael does Chipotle, yep. Lowe's, yep. Got rid of that one. Chipotle's a no. Their state laws. State laws for what? I'm lost in some of these conversations. Sell puts, buy call spread. Yeah, Sergio, no. Sorry. You ignored my comment. Q's pay a dividend. Please educate yourself. Oh. Q pays a dividend. Okay. Let's take a gander at Q's dividend. Invesco QQQ Trust. He's right, does pay a dividend. 2006. 2006 to 2024. 18 years of dividends. All right, let's take a look. 3 cents to 2 cents, 5 cents to 3 cents, 4, 3, 5, 3, 3, 4, 5, 4, 7, 5, 9, 11, 8, 12, 10, 16, 5, 11, 14, 20, 37, 16, 22, 24, 27, 37, 21, 25, 24, 39, 25, 25, 26, 34, 32, 29. Does anybody see consistency and increase in the Qs? No, I don't. 33, 42, 32, 42, 38, 46, 32, 36, 40, 53, 50, yeah. I see no consistency there whatsoever. I don't. That's one thing I don't like about it. Okay? The Qs. One thing I don't like, they're not consistent with the dividend increases. That's 1. 2, the yield. 0.58. Joey, 0.58. You're going to invest your money and get a 0.58. That's worse than a savings account, brother. Okay, savings account pays 1% per year. This is paying 0.5% per year. And you like the Qs? Hey, more power to you. Okay, so that's a summary. That's the historical performance. The Qs, $480 a share. Yeah, no thank you. Okay, the 480s. Whoops, that's too far out. Okay, yeah, the 480s. Not there. Let's go July 5. 460. Okay, so if it's currently at 480, I buy and I sell the 480, I'm getting less than 1%. Okay, so let's see if I can break it down for you. Right? Let me get it all loose. Number one, over 400 bucks. Yeah, no thank you. Number two, the current yield is less than the savings account, 0.58. That's number two. Number three, the option, it's a daily option, okay, which is kind of cool if you're into that. But if I go 2 weeks out, I'm not getting my 1%. That's number four. And number five, you ready for number five? The high of the year is right here. Look at where we are. Okay, yeah, that's a little too high for that. That's 5 reasons why I don't like the Qs. And you think I need to educate myself. Well, I said no the first time. What makes you think the second time is going to make me say yes? I gave you 5 reasons. 1, it's too close to the all-time high. 2, it's over $400. No, thank you. 3, it's not paying 1%. 4, what was number 4? Forget what number 4 is. 4 is, no consistency with the increase in dividends. And 5 has a 0.58% yield. Explain to me in a manner in which I will understand, because I didn't go to college, okay? I didn't. I don't know any better. Please educate me. How 0.58%, 0.58% for a year is better than 50% per year? Because I'm showing you safe, predictable, consistent 1% per week. Now, I just showed you a couple that do give 1% or more per week. That's fine by me. Qs don't do it. So I said no the first time, and now you come back and you insult me thinking I need to educate myself. On what? It's 0.5% a year. Why the hell would I think about doing 0.5% a year? Okay, and it's over 400. You think I get $480 a share to get 1,000 shares? No, I don't. I don't, and I admit that freely. I stick to stocks $250 and below. That's my price range. Terribly sorry. Q's out of my price range, doesn't meet any of my criteria, horrible with the dividend increases, the yield is absolutely atrocious, and you think it's a good deal? More power to you, brother. Seriously. Sean, we are your thoughts on QDTE that pays dividends every week. Okay, now, I looked at QDTE. They're not even a year old, brother. Not even a year old. Okay, so if they continue at the pace they're going and they continue to be profitable, now when I mean profitable, I mean year after year after year. Because if you're going to go in business and you're going backwards, what's the point? There are too many other companies that continuously increase consistently. That's where I want to put my money. You guys can put your money wherever you want. But QDTE, yeah, they're coming out with a bang, but they're going backwards. Because the first couple of months were okay, but now they're getting less and less dividends that dishing out. So QDT is a no for me. Sorry, Sean. Sergio, what's the implied volatility on Love Strike you mentioned? All right, Sergio, I really don't know why you need to know that one, but let's take a good look at it. LUV, implied volatility for LUV. The 2850 implied volatility. Oops, let's move this out of the way. Okay, implied volatility for the 2850 is 33.15. I don't know what you need to know that for. What I need to know, number one, do they increase their dividends? Yes. Number two, where are they if I buy and I sell the option? Well, if I buy it first thing in the morning, 28.48, I sell the 28.50s, I'm bringing in 60 cents. Do I care about the implied volatility? No. That's more than 2%. I'm fine with that. Okay? Don't make it more complicated than it needs to be. Okay? Also, where are they in the chart? Well, take a look. Here's your high here, your low here. Okay? She's bouncing off the bottom, shoots up here, pulls back, now she's going to the upside. I can get a third grader to point that out to you. Seriously, think about it. Okay? She goes down, she goes up. Gaps down, goes up. Comes down, goes up. Comes down. Now where's it gonna go? Come on, logic tells you. Goes down, it goes up. Goes down, it goes up. Goes down, it goes up. Okay, so I don't know why you need implied volatility. Because if the numbers work, the numbers work. Okay? If I'm buying for 28.48 and I sell the 28.50s, I'm making 60 cents. 60 cents, you know what? Let's bring out the calculator to find out exactly what that is. Clear. 60 cents divided by 28.40, whoops, divided by, whoops, clear that. Let's try it again. 60 cents divided by $28.48. That comes to a grand total of 2.1% for the week. Now ask yourself a question. Is 2.1% for 1 week a good return? Well, yes it is. Second question you need to ask yourself is, do I like Southwest Airlines? Because remember rule number one, never buy something you do not plan on holding for a long period of time, because you just might have to. Now what do I mean by you just might have to? The longest I've ever held a stock, now I've been investing for over 20 years, the longest I've ever held anything longest I ever held anything was 9 months. Okay, I've been investing for 20 years. Longest I ever held anything was 9 months, and I didn't do it on purpose. Okay, I bought Kimberly Clark. Okay, she went down. I held on to it. I continuously sold options as it's going down. She bottomed out. She turned around, came back up, and I sold it at a profit. So in the meantime, as she's going down, I collected 3 dividends and about 20 premiums. I collect a premium every single week. Now, the first couple of weeks was 1%, but as she slowly goes down, the premium gets a little lower. So some weeks it was 0.5%, some weeks it was 0.25%. But I tell you what, 0.25% per week is better than nothing. Most people buy a stock and hold on to it for decades and only collect 4 dividends a year, and that's all they collect. That doesn't work for me. Sorry. Let's take some more of these questions. It's 11:15. We're almost done for the night. Summer break. Hey, Hassan Pfeffer, how are you, dude? Haven't heard from you in a couple of days. Can you please reverse the screen around so we can see the chart correctly? Oh, Sig, how's this for an idea? How about you go to YouTube, because I'm pretty sure you cannot see these little tiny ass numbers on your phone. If you're a phone, laptop, a phone or an iPad or one of those things, you're not going to see these numbers. Okay, that's why this screen here, the screen behind me, this one, is live on YouTube. Okay, if you can't see it, I can't help you out with that. Okay, so what I could do is I could do this. Okay, now it's the correct way, and I'm pretty sure you still can't see these little tiny numbers. But you want to know something interesting? I got 5 cameras going. 1, 2, 3, 4, 5. One of them's going backwards. So that's why they're all going the exact same way. There's only one that allows me to do this, and it drives me nuts to see 4 cameras going one direction, 1 camera going the opposite direction. So that's why this screen is live on YouTube. Make it easier for you to see the numbers and to follow along. So I'm going out of my way to make it easier for you, because I can guarantee on your phone you can't see what these numbers look like. Okay, what's this number right here? Okay, 3.30. You can't see that on your phone. Okay, that's why this screen is live on YouTube. You can sit on your comfy couch, your recliner, grab some popcorn, soda, whatever, sit back, relax, watch on the big screen TV, and then you can see the numbers and you'll be able to follow along. So, more questions? We got 11:15. We got 15 minutes left. What software is it? It's not software. It's actually a trading platform. This is Thinkorswim. Okay, Thinkorswim by Charles Schwab. All right. All right, funny one. It is. I'm not sure what you mean about his strategy. Okay, I'm missing something. 2.5 for 1 week, not a year. Yep, that's pretty much. Not per year, per week. All right, I'm missing some of these questions. Love your podcast. Right, all right. Live quest, summer break. All right, got that one. Chart correctly, got that. Got that. What software? It's not software. It's Thinkorswim from Charles Schwab. It's called Thinkorswim. Yep. How do I find that? Oh, yeah, Charles Schwab. Google search, Bing, whatever search engine you use, thinkorswim.com. Download it onto your computer. Don't use the online version. It's not as good. James, how many stocks do you do per week? That's an interesting question. Okay, Wave Runner, you've been here before, and you've heard me say it. I have 6 different accounts. Okay, I share 2 of them publicly. Okay, so this account here has 6 positions. Another account has 3. Another account has 2. There's another account has like 20. Okay, so it's all different. Uh-oh, I missed a bunch of questions. Sorry, guys. Okay, hey, I'm caught up on the questions. Cool. All right, Omega. Trading stocks is pure capitalistic parasitism. Add nothing or value, produce no good. Cool beans. What a wonderful way of looking at things. How do you get started? Well, first, my advice to you, Tomb Raider. Cool, Tomb Raider. Just come back every week. Learn as much as you can. I'm here every night from 9 p.m. to 11:30 p.m. Hi, Dividend Nick. No way, Nick. I have no idea what you're talking about. 91,000. Yeah, I lost 91,000 in 1 week. Just joined, but thoughts on CRF. CRF. Cornerstone total return. That's going to be a no. Has no options. Okay, so I have a couple of rules. Rule number 1, company has to have at least 20 years of increased dividends. That's rule number 1. Rule number 2, weekly options. Cheesecake Factory, that's a no. They're not 20 years old. I think this is a lie. My papa is a financial advisor at Morgan Stanley. Cool beans, Nick. I'd love to talk to your dad at Morgan Stanley. But, Nick, what I tell everyone, I'm not a financial advisor, okay? Number 1, I'm not hiding anything. I'm just reading the numbers, okay? I can get you a 2nd grader or a 3rd grader to say, that's 1865. Because it is, it's 1865. Which is close to 19, okay? And that's that. That's that price, okay? I can also get a 3rd grader to say, oh, here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. And I can even get the 3rd grader to say, oh, look, it was here. Now it's there. That's the direction it's going. So I'm not quite sure what lie it is that I am saying. Please enlighten me. Because I don't want to give anybody any misinformation. Because I'm just reading numbers off of a financial chart that you can get almost anywhere. Okay? But, Nick, I'd like to get your input on that. Because I don't want to be, thought of as unreputable or ill by DJT. Sorry, DJT's got a long way to go. Nick, no lies here. Thanks, 86. Tomb Raider, how do I get started? Well, if you're really interested in getting started, now there's 26 other people pretending to be me here on TikTok and on other websites. So, you really want to talk to me? DM me with your phone number. I'll give you a buzz. Because this is not for everyone. It's simple, it's safe, it's predictable, but it's very slow. And it's very simple. Because it was created for a 9-year-old. Okay, when my daughter was 9 in 2008, she wanted to do the same thing I was doing. So, it had to be simple, it had to be safe, predictable, consistent, and no way she could lose. So how do you do that? Well, number 1, never buy something you do not want to hold long term. If you don't understand what the company does, if you can't give a 2-second or 5-second elevator pitch on, hey, what does AT&T do? Everybody knows what AT&T does. But does anybody know what SCHLD does? Or VOO? What does VOO do? I don't know. Okay? So ask yourself the question. Simple, safe, predictable, consistent, no way to lose. Okay, number one, never buy something you don't understand or you don't want to hold long term. Number two, never sell at a loss. Just kind of pointless. Number three, and it's a big one, make sure the company has 20 years of increased dividends. Shane, how you doing over there on Facebook? 20 years of increased dividends. Why? Well, because if they have 20 years of increased dividends, it's got to be at least 20 years old, which means they made it past the first couple of hurdles. The first couple of hurdles, most companies don't make it past 5 years. 1 in 100 make it past 10. 1 in 1,000 make it past 20. Okay, well, you're already beating the odds. And if you have 20 years of increased dividends, it means every single year you're making more and more money. Because if you can give more and more money to your investors, well, you got to be doing something right. Okay? That's 3. Rule number 4, weekly options. Well, I like weekly options. Weekly options gives me a weekly paycheck. That's what I'm looking for. Safe, predictable, consistent, weekly 1%. And number 5, make sure the numbers work. What do I mean by the numbers? Well, what can I buy it for? What can I sell a covered call against it for? Is that 1%? Great. If it is, what is the chart telling me? Okay, well, here's the high, here's the low, here's where it was, here's where it is. It's a big fat no because it's at the high of the year. I do not want to stand on a ladder waiting for someone to bring me a taller ladder. That's not my game. Okay, I like buying it when it's low and it turns around and goes back up again. And it's really not that difficult to find. Okay, take a look. She goes up, she pulls back. She goes up, she pulls back. She goes up, pulls back. Here's the bottom here. She turns around, goes back up again. Okay, all good stocks do that. All right, so we're at 11:23. So you have any more questions? Netflix, really? Netflix? I haven't looked at Netflix in a while. F. NFLX. Yeah, it's a no. 2 reasons why it's a no. Reason number 1, it's over $250. Reason number 2, it's way too close to the high of the year. Sorry. We're 86. That guy is no longer here. You can ignore the comment on Q's. Don't get me wrong. Q's is a great idea for what it is. But is it a long-term investment strategy? Not for me. Okay, now for someone that might work. But for here, for what I'm teaching, no, it doesn't work. OMG, let's do BMY, Bristol Myers Squibb, BMY. It's a great company. Ooh, check it out. I like the way the chart looks. Now you may think it's going down, it doesn't look good. But take a look at the last couple of weeks. It's finding its bottom, it's turning around, it's moving up. So what do I want to take a look at? I want to take a look at what can I buy it for. 42.30. The 42 is going for 64. Yes, I like that. The 42.50 is going for 47. I would do this one at 42.50. That's a nice fat premium. Okay? Now, I like the numbers. The chart, first thing I want to see on the chart, where's the high? Where's the low? Where was it a year ago? Where is it now? Which direction is it going? It looks like it's going down. Okay? But remember, we're not here for yearly returns, yearly investing. This is for someone who's looking at yearly. No, that's not what we're doing. We're looking at weekly. Because I like weekly. Well, because I want to make sure I have income coming in. I'm retired. I have the time. I can do it. It's less than 10 minutes a day. So let's take a gander. You get a high of the year, 65.26. That was last year. And she drops down to a bottom, 39.74. Okay, great. What's the last 90 days? Why last 90 days? Well, it's the last 3 months. Okay, here we are, right here, 54. She drops down, but look, do you see that right there? That is the low of the year. When you're buying a stock, you buy low, you sell high. Brothers and sisters, you cannot get any lower than the low of the year. And there it was, 4 days ago. Like, let's zoom in and take a look at it. Okay, here's your monthly. You ready? Month ago, down, up, down, up, down, up. Look where she is now. Here's your bottom of the year, right there. You can't get any lower than that. Now, I'm a little unhappy about this right here, okay, because I missed that opportunity. The opportunity was yesterday. Okay, here's your bottom of the year. You can't get any lower than the bottom of the year. So this might be one you want to keep your eye on, see what it does, see where it's going. Jack Pat, THQ. Never heard of THQ. Know what I usually come up with when I say I've never heard of THQ? It's usually a no. Well, no options. It's a no. There you have it. Elite Style Garage, 9 months. I have no idea what he's talking about for 9 months. I bought KMB, Chemical Clock at 118, it's now on 40. Well, good for you. I'm not into long-term. Can you show P&L? I have 6 accounts. Which one would you like to see? So, you don't believe in Warren Buffett's mentality. I didn't say that. Warren Buffett believes in buying good quality companies. I agree with that 100%. You shouldn't buy it if it's not a good quality company. He's buy and hold forever. He's got the money to do that. I don't. Okay, if I had the money to buy companies and get 3 to 5% per year and live comfortably, I'd have no problem with that. But sorry, I don't have that kind of money. The money that I have, okay, I invested and get 1% a week. 1% a week off of my little net worth is perfectly fine for me. Okay, if I want to do 3 to 5% per year, yeah, no, I'd still be working. That's a no to me. Do you use any other trading platforms? Yes, I use Robinhood. Yep, Robinhood, it's free. Yep. Trading View is great app as well. Okay, now Tyler, I'm not 100% sure. I've never seen Trading View. I come from that old style thinking. If it ain't broke, don't fix it. This works perfectly fine. Okay, everything I want is right there. The only reason I use Robinhood because I have it on my phone. It's simple and it's easy, and I do this every day. So I already have it in my head what I'm looking at in Robinhood, so I don't have to go do any research. Gallant, BMY, we already looked at BMY. Ablemal, we haven't looked at Ablemal. I didn't think did I say BMY was a buy? Oh, I did not say BMY was a buy. Take a look at the last 30 days. Okay? She drops, goes up, drops, goes up, drops, goes up. Look at where it is now. It's at the turning point where she's going to start to drop again. Yeah, so BMY, if you like Bristol Myers Squibb at 42.30, okay, you're getting a nice 1%. All right, but look what the chart is telling you. Okay, up, down. Here's your bottom here. She goes up. Look at the distance between the 39.60, between 39.60 and the 42. Well, they're starting to take profits. Fine, if that's what you like, fine. For me, it's a no. Okay, Gallant, we'll take a look at Ablemal, ALB, and we'll go from there. Ugh, yuck. 92.95. The 93s, no wonder why they're so high. Check it out. 92.95, right? 92.95. The 93s are going for 244. Okay, that's over 2%. Why? Well, take a look at right here. The bottom of the year was 3 days ago. Okay, so 3 days ago, she's in a free fall. Okay? From 130, she drops all the way down to 92. To 92. 1 day of the upside, pulled back again. So, are we at the bottom? There's a possibility that last Friday could be the bottom. Not guaranteed, because look what happened. She went up, she pulled back again. Maybe it is, maybe it isn't. There's no clear cut for Ablemal to be the bottom. Okay, 11:30. See if I get these last questions in. I wish I had 91,000 laying around to lose. Well, I didn't have it laying around to lose. Okay, it just happened that way. Okay, for dividends. What are you using? I have no idea what you're talking about. Do you own a nice watch? I don't have any. I have a couple of watches, but I never wear them. So no, I don't do watches. I don't do any jewelry at all. Do you notice that? No jewelry. Right, exactly. AMD. Okay. I miss all these questions. Understand the 1% is different between profit and loss. The proof will be tax cap gain, but loss is a wash. William, all right, if you're worrying about taxes, you definitely need to talk to a tax strategist. Okay, so let's think hypothetically speaking, okay? You take your trading account and you put it into an LLC or a C corporation or S corporation or into a trust, okay? Someplace where the federal government can't get their greedy little fingers on it and you just control it. In a corporation, you're paying a corporate tax. And if the corporate tax structure is proper in whichever state you decide to incorporate in, you're taxed on the gains minus any losses. So if your corporation happens to buy a brand new car every year, and you being one of the board members of the corporation, you get the privilege of using the car. Now, if the corporation buys investment property that is losing money on a yearly basis, well, that's also go against your losses. So however you have your structure on your trading account is totally up to you. Now, I have mine to a point where I don't have to pay taxes at all because I have so many losses that I offset all my gains. Okay, so figure it out. If you need, you should really talk to a tax strategist or a tax planner, someone that will allow you to not pay taxes legally. That 2,583 million page book that the IRS has was designed specifically so that you do not have to pay taxes. You just have to go through the efforts to figure it out. Or hire someone that knows. And if you hire someone that knows, guess what? That's a tax write-off. So if you're worried about taxes, you're the same guy who goes to Ferrari deal and say, hey, I like that car. What kind of gas mileage does it get? If you have to ask what the gas mileage is on a Ferrari or a Rolls Royce, you can't afford it. If you're worrying about taxes, you're in the wrong game. Talk to a tax strategist or a tax planner. It is your legal right to pay little to no income tax if you do it correctly. That's up to you. I can't help you out with that. GILD, huh? GILD, quick. GILD, quickly. That's going to be a no. Okay? Let's show you really quickly why it's a no. Right now it's at 69.56. The 70s are going for 78 cents, which is nice, which is over 1%. That's not the issue. The issue is right here. Okay? Here's the issue, right there. Okay? Here's your bottom. Up, down, she shoots up, she gaps up, she gaps up. Those gaps are going to fill, and guess what's going to happen? That bad boy's going to drop. Sorry, it's just what the chart is telling me. Okay, if you want to buy it there, hey, more power to you. But to me, that's a big fat no. Okay, so it's past 11:30. You guys have a great night. Chat with you again tomorrow. Same bat time, same bat channel. Finish. You guys done. Have a lovely day, everyone. See you again tomorrow night. Now, for you guys down here,